Let's get started. A little bit late today because I've just walked in from somewhere else, but let's get cracking. So just to explain what this is, we do these 3 times a week where we look at what's been going on with all the major markets. So this is the last one of the week. We normally do Monday, Wednesday, Friday. There won't be any next week because I'm taking a week off, but there's plenty of content up there on our YouTube channel anyway. So let's just put the risk warning up first of all while I'm talking away. So I'll just leave that up there for a bit. So we'll have a look at the usual stock market indices, a couple of currencies. We'll look at the euro and the pound, and also we'll take a look at gold and oil. We did see oil was interesting. It slipped below $50 yesterday. But it did bounce back again, and it's currently trading above 50 now. So this 50 level has been maybe a little bit of psychological support for the price of oil. But let's drag this over and get started. Of course, last night we did have the release of the Fed minutes. They came out last night, and they do point to I think an expected interest rate rise as expected in December. From the US. So we'll have a look and see how markets reacted last night. But let's start off with that oil price. Let's just bring that one up. Just to remind ourselves, we've been talking about this trend now for it's been going on for a couple of months. The price has gone from 77, almost 77 in October, briefly below 50 yesterday. I must admit, I went against all my better judgment, and I've traded oil twice this week, both against the trend. So I got stopped out on the first one. I bought it just on Wednesday. So it would have been here somewhere, just ahead of the oil inventories coming out. It did spike up, but sold off. Took my stop out. I think my stop was at 49.80. Got stopped out on Thursday. But then I thought, well, actually, it's broken 50, and we didn't see a big sell-off. We've talked about this idea of false breaks before. So I was wondering yesterday, was it a false break? So I've bought back in, and it did rally a couple of dollars before selling off again. So I think it's going to be interesting here. Clearly we don't want to be calling the bottom in a market that has dropped as consistently as it has over the last couple of weeks. But I think it's interesting, this battle going on around 50. Will it end up being something of maybe just a short-term bottom before the price slips lower? But so far, at least, 50 is holding. There's an argument from my point of view. I don't think I'm going to trade it again today, but there's an argument. We've seen it sell off from above 52 last night. It's starting to show support again ahead of 50. So I suppose if you really wanted to go against that major trend, there's an argument for seeing how the current hour ends. Do we see a bit of stability come back in? We've got the RSI very oversold, well, not very oversold, but oversold down here on the chart. So let's see what happens. Maybe we'll see it claw its way back up to that sort of 52 level again. Let's see what happens. So but that trend is still down, clearly. I mean, that trend off those highs is still down. I think for oil, it needs to break through, to break this trend through 58, probably the highs from the middle of November, to suggest that trend is changing. So I think for now we've got to be very wary of any rallies. But it's interesting that 50 has sort of held over the last few days. Let's come back to it. Actually, it won't be here next week, but let's see where we are the week after next. See if we have seen this 50 level form some sort of base for the price of oil. Let's take a look at gold. Gold bounced back a bit, I think, over recent days. Let's just, this is the trend I've been going on about in gold for a few months now. Well, a few weeks maybe. It's that recovery off those lows from the middle of August. So we saw the price go from 1360 in May as low as 1160 in August. That recovery is still chugging along. That was the move on Wednesday. A bit of a move up. Pushed a little bit higher yesterday, and just a bit quiet today. Nothing too exciting really going on today. If you've got any questions while I'm sort of chatting away, there's that chat box to the side of the YouTube screen, so feel free to leave any questions in there. But for me, it's the same old on gold. If it sells off, we've got support for 1180 to 1200. That seems to be good support. For me, that recovery remains intact as long as that 1180, 1200 area holds. And there's not much more to say to it, I don't think, apart from that. Let's take a look at stock market, not stock markets. Let's look at FX. Then we'll wrap things up by looking at stock markets. I was long the pound as well this week, and that's. I mean, this is for me, this shows you the importance of big levels. I know I always bang on about this, but the idea, trading does not have to be massively complicated with 30 different indicators and 10 derivatives of Fibonacci and stuff like that. Look, the pound, whenever we've seen the pound, and it's happening again now, slip back to the low 127s, we've seen buyers come back in. It's been a pretty flat couple of weeks, to be honest, but we are seeing, whenever we see it down at the low to 127s, we see the buyers come back in. So for the pound, nothing has changed since we looked at this on Wednesday. The big level is 126.50-ish from August. Late October lows at 127, lows again middle of November at 127, and lows again this week at 127. Let's flip this over to an hourly and we'll see this a bit clearer. So there you go. You can see there's been an obvious base for the pound US dollar rate over the last couple of weeks. It's been pretty dull. It's not like we've seen 300-point rallies off that level. We had it has got maybe 200 points away from 127. That spike up on no doubt. I can't remember what it was. Some Brexit news, wasn't it? But the low 127s appear to be still a floor for the pound. So that there's arguably, if you really wanted to, at the end of the week, there's arguably a trade in there. We've come off from 128.05 at was that 5 to 9 this morning, 9 o'clock this morning. We've dropped 60, 70 points. And again, we're seeing, we are seeing now, since 10 o'clock this morning, those low 127s hold again. So there's arguably a trade to be a buyer with a stop. The closest I'd want to stop if I was buying here is underneath the lows for the day so far. So somewhere below 127.40. But we've got, bigger support. If we flip it back to the hourlies, back here, a sort of 127.20. Let's just take this out on the dailies, and if that level breaks, let's say it does break. At the moment, it's holding up. If we did see the pound slip below, let's say 126.50, the August lows, I think the first thing to watch is it a false breakout? Do we actually see a move there? So actually, a break and a sharp reverse could be still a buying opportunity. But if we see it start to push much below here, we do have this old support left from June around about 125.80, and then not much until we go sort of sub 124. I can't see it myself just yet because it is proven to be such a good floor. But I think clearly those are some levels to watch. I think if we do see it start to lose 126.50, does it open up or kick off a much bigger sell-off? Initially, I would be looking to buy it, thinking it's a false break. But let's see what happens. But it's pretty dull the last couple of weeks, but still tradable. We've seen 100-point jumps off that level. So there have been, if you've been so inclined, I think, opportunities to trade it off 127. Let's take a look at Bitcoin's down 7% today. Maybe we'll have a quick look at that. What we was going to look at, euro dollar. So euro dollar, this whole false break thing. We looked at this in the week, but it's this sort of move here, like on the euro. This is the daily chart where we had 113 was a big level, and then it broke it on the 12th of November, but reversed really quickly the next day. So it's that sort of thing move that I mean, by a false break where a big level breaks, but we don't get the follow through. So the euro dipped back again to 112.60-ish and has rallied 140 points off those lows over the last couple of days. So for euro dollar, if it's still that 112 to 113 area is providing support. Any move sub 113 appears to be a buying opportunity. On a daily chart, the stop would go somewhere the other side of those November the 12th lows at 112.20. Let's take a look on the hourly. So maybe we'll just see it continue to chop around. They're all a bit, because we're just waiting to see what's going to happen with this Brexit bill in particular in the UK. It's all just a bit scrappy, I think, when it comes to FX in the moment. But the euro clearly lifted by actually it wasn't even the minutes last night, was it? It was that was the move on Wednesday, wasn't it? So late Wednesday, not much movement over those minutes. Let's take a look at stock markets just to wrap things up for the day. It's been a good week for stock markets. Actually, we'll look at Bitcoin first. I said we'd have a look at Bitcoin. I think these markets are interesting, but I wouldn't trade them. I think it's clearly it's a very different market, cryptocurrencies this year, to what it was this time last year. We've seen Bitcoin fall off a cliff during November, It's gone below that old support, 5,800 to 6,000. It's got really clobbered. Maybe, what we've seen in the last couple of weeks are people who've held it all the way down, finally throwing in the towel on that break below. We've seen something of a bounce back up to 4,400, but you can see just how hard it's selling off even now. Yeah, so the next level for Bitcoin is those lows, those 3,400 lows. 3,000 is a big level going back to sort of September last year. Sort of 2,900, 3,000 was a bit of support, but you wouldn't buy it, or I wouldn't buy it anyway. You might buy it. I wouldn't buy it because it's just under so much pressure still. So it's rallied a bit, found a bit of support ahead of 4,000, and it's broken it over the last couple of hours. So maybe the risk is for a drift back to have a look at these old lows. But I think there are far more sensible markets out there to trade than cryptocurrencies. And let's have a look at stock markets to wrap things up. So the Dow Jones, just to remind ourselves, what we were looking at coming into this week was how stock markets could react near their old lows from October. So on the Dow, it was 24,100. The October lows, also 24,000 is a big level from back in June. And it's been a really good week. We've had it's risen every day. We've had plenty of volatility, but Monday to Thursday, we have seen gains for stock markets. A bit weaker today. I've got this red candle going on today on the Dow, and maybe we are getting near resistance on the Dow. We're getting back to these sort of levels up here. If we saw mid-November, sort of 25,600 continued to be a problem. So arguably, if you really wanted to go short the Dow, or other stock markets, we are banging up near resistance. So if you really want to, if you think the move this week has been overdone and we're due something of a sell-off, then going short here somewhere, with stops above 25.6, that would be the closest I would want my stop at the moment. Actually, it has come off a lot, hasn't it? I suppose since it's come off. I mean, yesterday it touched 25,500, so it's 250 points lower than where it was yesterday on those Fed minutes. So it has come off quite a lot overnight. Maybe we'll. I mean, I don't think. Maybe I wouldn't want to go short here then with the stop loss so far away. But maybe the opportunity, if we do want to go short, if we see the market rally into today and maybe run out of steam. If we get a decent rally today, does it start to run out of steam again? Stock market's up near yesterday's highs. Let's just flip that over. Here we go. There's our 5-minute chart. I think it's interesting down here anyway, because we again have this big level. We have the lows from yesterday on the Dow around about 25,200. The market did at 20 past 12 come down to that level. So I think if you're short-term trading the Dow this afternoon, that's one thing to watch. I think see if 25,200 continues to hold. So maybe now we are going to see a bit of strength into the open. It should be an interesting afternoon actually for the Dow, because we've sold off a lot from those highs. We are holding above yesterday's lows, but we do have, if we flip it out to the hourly, about 300 points higher. We do have potentially this old resistance coming in. But for me at the moment, I think my money would be on a bounce going into this afternoon, assuming these old lows from yesterday hold. So we'll see. We'll see what happens. So I think we'll start wrapping things up there. Actually, just a quick sort of end of week wrap up. So I think interesting things to watch. Oil, because 50, it's flipping around 50. So we'll see what happens. But someone just put a message in about Bitcoin. We did just look at Bitcoin, and it's still weak. It's still a market that's under pressure. If you've only just joined, the recording of this will be available as soon as I stop. And so if you wind back about 5 minutes from now, you'll see where we had a quick look at Bitcoin. So oil is still interesting because of that big decline and $50 sort of holding over the last couple of days. Currencies a bit flat, the euro and the pound, because of all the Brexit stuff. But stock markets have had a great week, relatively speaking. And I think it's going to be interesting this afternoon to see if yesterday lows hold and whether it runs out of steam again if we do see it move up to yesterday's highs. So there won't be any live sessions, I don't think, next week. We'll be back to normal the week after. What I would say is we did put up, if you haven't seen it yet, we did put up a video yesterday about averaging down that's proved to be pretty popular. So hopefully you can see that on the screen now. So there, adding to losers. So if you're on our channel, go to Capital.com, and it's click on videos, and it's the latest video. So it's adding to losers. And I think averaging down is one of these things. Many people say when their shares have fallen, for example, say, oh, I'm going to average down. They make it sound like a sophisticated investment strategy, and it's not. It's just basic. I think it's basically people have a problem admitting they're wrong. So talk a bit about averaging down the risks and how to avoid it. So I think that could be one worth watching. But we'll wrap things up there as usual. To find out more about the company, go to Capital.com. You can open an account, have access to all the charts and stuff that I use here today. And so a week off next week and back into it the week after, and we'll see where these markets are. So until then, I hope your trading goes well, and thanks for coming along today.